Hello everyone and welcome to another video. I've got a question from Matt from Istanbul, and he asked a nice question. He said, look, if I was to use a technical analysis approach, since there are several, which one would be the best to use with swing days and trade hours according to what we do at the GlobalTrader.Club? So let's do this. Let me first get myself out of the way. I'm going to do this on not just gold, but on a few assets so you can have a clear understanding. Now, first of all, I'd like to say that at GlobalTrader.Club, what we do is when it comes down to technical analysis, I'm using several techniques, and most of you have taken the technical analysis and the timing courses. So you know why we're using more than one technical analysis method, because the markets are going in different formations. So we want to look at a few things at the same time. But if you said to me, look, I don't want to deal with 1001 things, not that it's 1001 things, it's just 5 methods, 5 types of technical analysis we look into. But if you just want to do one thing, what would you do? I'm going to look into that right now. The reason I don't do just one thing is because otherwise you can miss good opportunities, and because we're using time and price together when it comes to swing days and trading hours, our probability of success is much higher than the regular guy out there. So you don't want to be missing out if something is hot. But let's first answer that question. Now, first of all, remember, in the technical analysis, what we want to do is when we open up a chart, we want to see what's going on. When I look at the chart, I should be able to see where the direction is, what my bias is going to be, where the levels moved, where the market bought and sold heavy. Okay, if you got to ask yourself just one question, all right, just say, well, where did they buy and sell heavy? What bar caused the breaking? Right? If you just did that, you'd be fine as well. Then all you have to do, for example, this is gold. You got to check every time the market has caused a break. So if I was to go back, let's say we're here. Don't worry about what's down here for the moment. This is my PST indicator. It's a special indicator for timing. Well, it's pricing the time, but don't worry about that for the moment. So as you can see, the market is going sideways. So whenever we have a sideways motion, we want to see where they bought heavy, sold heavy. Now that's the resistance there. Okay, market comes back into a good buy kiss, which if you've taken the course, you know about it. So you would not have missed this, and this would have been a beautiful trade going all the way from one swing day to the others, next ones. All right, so that was like a nice bit of cruising there, and then pull back. You can see it's just like nice and easy if you get the rhythm. But if you want to use just one thing, look out for those price levels where they bought heavy, sold heavy, where there is support and resistance. What bar is the cause? For example, this bar is a cause. I'll extend it all the way here. This is the cause for the breakout. Okay, so every time the market comes down here, you see there's a buy reaction. There's a buy reaction. Okay, market wants to buy, and you also want to keep an eye out for gaps. Okay, this is why we have to look at a few different techniques. But if you don't know, if you just want to look at one thing, I guess that's what you got to do. So gap is here. Right, so the market is nearly filled in that, and that's fine. Now look what's happening here. The market fills in the gap, takes off, retests, comes back for a retracement, and then pushes up on a swing day, and then bang, you see that is now a breakout. Now when that is a breakout of this zone, this bar also becomes a breakout zone, but we've already kind of taken that in there. So all you have to do is constantly update it as we're going along. But because this is a daily chart, you don't have to update it every bloody 5 minutes. It's just when there's a decent move. All right, so if we have a zone, and if we understand there's a price gap, and also another good reason I teach 5 different techniques of technical analysis is because they can correlate, they can like come together and pinpoint a level for us. They can say, you know what, this is the level because it's done with this level, it's done with this technique, it's with this technique plus that technique. We got a few things that happen, and then all of a sudden, as you know, if you're watching the videos, 37.5 for us is really nice and important. It's juicy. 25 is juicy. So the market comes down. It's a swing day after that price has been done here. So it's only logical you want to get in. Okay. And if you take a look at, that's the 19th of May. Those are your trading hours. And that's gold Monday going into Thursday or Friday. That's your Monday, Tuesday, Wednesday, Thursday, Friday going into your Friday. And on the next week, Monday is also a swing day probably, and that is why I've got that level as well. So from the 20, so that's a Friday, 26th of May, we should have also had probably a swing day, and that's why we've got the arrow. We've got the arrow there 2 times. So that's a Friday, and that's a Monday. Okay, that does happen often, and I like it as well because you got 2 days one after the other. It's just going to target it out, and if it's decent, it's going to reverse. Okay, so having this golden level 37.5, we've filled in the gap. We've got a trade day on a Tuesday. Let's just nail it and go up because we're pretty confident this is going to be okay now. Okay, now one of the things that would make you less confident if you were just doing technical analysis is that this level has been dipped in a few times. Okay, this has been dipped in once, twice, 3 times, 4 times. It has failed. Okay, and you can see it's been mucking around here for a few days before it took off. Okay, so using that as a swing day gives us the opportunity to say, okay, you know what, I'm going to go in here either in this zone at a trade hour. If I go in at the trade hour because the price is right and the day is right, then my stop loss is going to be tight. But alternatively, I can also go in according to the breakout as well and just follow it through. Sometimes we like to call it chuck a Yui when we're doing a U-turn on a smaller time frame. So if I go into that, that was, what was that? That was the 19th of May, right? If I'm not mistaken, where are we? Here we are, 19th of May. So on the 19th of May, those were the trading hours for us. Okay. Let's take a look at the 19th of May now. On the 15-minute chart, we're going to have to go back quite a bit. Let's do it. 19th of May, that is going to be way there back. Okay, nearly there. 19th of May. Here we are. Alright, so this is our 19th of May over here, which is a Monday. Alright, so on Monday, what did the market do? Monday we had that. Let's see what time that was. Remember, we're going according to my hours. Now this could be an hour off because of springtime, you know, summertime, wintertime, because the platform will change 1 hour during the year. So I'm not sure if it was then or not. So that's 9:20. So either at 8:20, because it would have been an hour earlier, I guess, or 9:20. So 8:20 is here. Let's say it was 8:20. It bounced off and started moving to the upside. Let's say it was 9:20. 9:20 is also here, where the market also comes back into the opening and pushes up. Now, if I know the trading hours, those are the hours I want to get in at. Okay, so the market has pushed up. On Monday, we're having a pullback, and you see the market filling in a gap here. Now, that gap isn't exactly filled. All right, there you go. It's pretty close. Okay, it's pretty close, but it is filled. So with the trading hours, we want to go upwards. Also, if you take that as an impulse wave on a smaller time frame, I'm going to check where we're at. Okay, and we're only at around the 50 zone, which is fine. If it matches your swing day on a daily as well, for example, look, this is on a Fibonacci. Let's say I'm using the 37.5, 50. Look at that, it's a 50%. Price is done, and we've got swing days the following days. So yeah, I want to go long. Okay, it's a 50%. It's good. Why? Because I just got a 50% discount. And another good reason for us to use that as an excuse to kind of like buy is because if you know a few different techniques of technical analysis, you'll be able to see the formation it's doing there. Okay, so if we were to mark that in, let's do that in yellow. Okay, so we've got an impulse move there, and then we have an A, B, C coming into the 50, pushing back up, coming back into 37.5. It's a swing day, then you got room to go up. Okay, so now it becomes logical to buy if you've got your formations and your setup like we've learned in technical analysis. That is the thing that's like making this really special, because you understand what the price just did and you expect it to do something, and it does it on a swing day. All right, and then you can start mucking around with it and going up. If you take a look at the next day as well, this is Monday the 19th. Let's take a look at Tuesday. Okay, if I wanted to get in on a Tuesday, could I have gotten in on a Tuesday? Let's see, since I've got the whole week here. I've got 6:45, 7:15. Let's see where that is. 6:45, 7:15. Because this is going to be about my hours. This is your 6:45 to 7:15 is going to be there. So that's good. This is London pre-trade session. And then I've got, then it can be a flow day into 2:25 to 3 o'clock. So 2:25 to 3 o'clock, we're going to be in a flow. That's your 3 o'clock. And that's your 2:25 there, which is nice to see. As you can see, right, 2:25 is going to be just on there because it's a 15-minute chart. So we've got a nice flow day. Now it's important to take note of these little comments, all right, because if I know it's a swing day or the next day of a swing day, I want to get in, especially if the market is down. I want to get in with a long, and if it's bounced off at a decent place like we've measured here on the daily as well. So you know, these are the zones where I want to be looking to like get in. So if I have the hours, then I also have, as you can see, a Fibonacci level, market just chucking a Yui. You can also get in exactly at the time, or you can wait for a U-turn, as we've learned in technical analysis as well. So what am I trying to say? Work off the daily. If you're going to use just one method, use where they bought heavy, sold heavy levels to do your trading on that swing day. When the swing day and the price match, go to your trading hours, just trade at those hours on your smaller time frame if that also matches your technical analysis. So on this one as well, it was a nice flow day, and then the market, where were you going? So that's that, and then it's going all the way into 9:35. So I've got 10 past 5 to 5:40. This is your 10 past 5. As you can see, right at the top, that's your 10 past 5 bar. Market's coming into there, and your 5:40 is going to be there. All right, nice and easy. All right, and then we're following through into the closing, which we talked about as the last hours of today. Around 9:35 is going to be, whoops, around here somewhere. 9:35. All right, so as you can see, it was a nice flow day going up. Now if you've missed that as well, it's fine. You just do the same thing again for the following day, because the market is already done its move. What you have to do if you want to push further up, the beauty is you already know when the next days are. So the next days for this week is Thursday and Friday. Let me put a sign up here as well. Okay, this one here. So we've got a Thursday and Friday. So we know we can like push into Thursday and Friday. Okay, nice and easy. So we've pushed into Thursday and Friday. So if now I'm on a Wednesday, every time the market comes down, I want to push up. Okay, I don't want to be pushing up from the highs. We just wait for the market to sizzle down and then we go up. Now, the levels you got to look out for again during those days is going to be technical, aren't they? So if I take a look at, for example, today. Right. As you can see, I've marked in technical analysis levels from the video for this morning. All right. The vertical lines are the hours. And if we do come back into trading hours, want to be going up, we could do that on this zone here, because this is the place where the market broke out. So if we come back down into this zone, this is the high of yesterday or Friday, basically the previous trading day. This is the closing, this is the opening. So this zone is okay to go up, but today is Monday and I think it is, let's check out the mother of all books, it's going to be a swing day today, I think, for gold. 1st of September, that's right, it's going to be a swing day for gold. So where are we for gold? Well, we're at a place where they sold heavy for gold, so I don't want to be buying up here. Okay, I don't want to be buying up here. I'd like to sell if the market comes into those prices. Where am I getting those prices from? From my PST levels, either on the daily, weekly, or you can see the red dotted lines here. Okay, all right, so checking out these red dotted lines, these are the targets for the breakouts. Okay, so if I want to make sure I'm going in, I need to have a target, right? Okay, so these red dotted lines are the target for the breakout. The blue dotted lines are the targets if the break is to the downside. So then I've got one target here, two target there, and this is how we got 3,469 last week. I think it was off the PST level. I'm sure it was off the PST level because that was it there. Okay, so last week's trade got closed out there. So we don't want to be buying at the top here. All right, you'll also see on the daily here, if I make this a little bigger, that the next time I want to be buying should be at a place where the market was a cause for a breakout if I want to be safe. Okay, obviously you can buy in before if it closes gaps and so on. Like here is a gap closure level. Okay, it's closing this gap here, and then if it's a swing day down here, you want to go with it, go ahead, no problem, as long as it matches. Also, I've got pricing here on the PST, as you can see. Right, so this 60 zone here, this 60, and that's a price of 3,424. So that 3,424 is, as you can see right there. Okay, the 3,423 is from the weekly, which is that red line, 61, 3,419. Which should be the weekly pivot. That's it. So yeah, this is the reason why I didn't put a line there, because the weekly PST is that 3,424 is this daily. So we should expect the market to sizzle down. Now, if the market goes up first, selling is logical because I want to come back and retest and so on. If it comes down first, then we could get a little choppy and we could be snaking along sideways. Okay, but at the end of the day, you'll be buying lows, selling highs at trade hours which match a price, making your trade much more reliable and effective and accurate. You'll have a higher hit rate. All right, and that's basically that. Okay, and this is how you can, this is like on the euro dollar on Friday. Nice and easy. Trade hour, boom. Okay, trade hour going up, trade hour going up. Also, same thing here. As you can see, I've got a technical analysis formation, and I've also got a PST technical analysis formation, so I've got a target. Today's target, 57, it's a price of 1738. 1738 is, ladies and gentlemen, right there, 1738. Pretty much done. All right, that's 1738, right? I'm not mistaken. 57, yeah, 1738. And the blue line is an LCL1 line. That's 1747. So this is going to be your target zone. All right, so you already know, you see, where you're heading to. And if you get in at the right time and the right price, then, you know, that's it. You just have to follow it through to those levels. So with the euro dollar as well, as you know, from ages ago, and I mean ages ago, we're long right from there. Okay, market comes in, see on the monthly how the gaps filled in. This is technical analysis. So if you know that, then you know that's what you got to look out for. And then that was the high, that was the low. Guess what? Spot on 37.5. So the market hits there, okay, and the low of that happens to be 1.0177, right, pretty much ages ago, in the 1st of, well, this is January, all right, so it's done it in January. That's a full month. Well, if I go back into January, let's take a look. This is euro dollar. As you can see, I'm putting all the arrows there as well. Oops, too far. We've gone too far. Here we are in January. So that low was 1.0177. 13th of January. And we had a swing day on the 14th. Okay, it's just good. Now, in this zone, you just want to be a buyer. Okay, because of the monthly, right? Your bias is to the upside. We've just had a beautiful fall down, like a waterfall. And we just want to take it up after that gap's filled at 37.5. So now, every time the market is down, you want to be pushing to the upside. Look where they sold here. They sold where they sold before. If you take a look, this is the cause, right? That's the cause, and the market sells off. Now, if I take this rectangle, bring it to the place where the market took off before, okay, then this is where they bought heavy, this is where the market's been buying, and then you got that swing day to the upside. Market comes back down again. Even if you did this bar here being the cause of a breakout of this recent swing, you're okay. Okay, because the market dipped down, went back up, you know, like swing day, you are down, you want to be buying. Okay, again, buying. Market comes down. As it comes down, every time it comes down, you want to be buying. So that's basically it. If you know how to mark your levels technically, then you should be doing just fine. You can see these are all the times I've marked the swing days. If you've got a direction, you know you want to be getting in. If you just draw your trend lines even. Okay, wow, it's a swing day. We're on a trend line. Push, push. Okay, and then obviously you must have targets. Without targets, there's nothing to talk about. This is why technical analysis is very, very important. So, same thing for anything. SP 500. If you know the swing days in advance, you can day trade it because you know all the moves when they're coming in. Oops. If you're medium long-term trading, that's fair enough. it's still going to match your technical analysis. Okay, then all you have to do in that month, well, that's ages ago, obviously. This is the weekly, right? So that is April. Let's go to April. That's your April. That's your swing day at the low of that period. Now the market takes a huge push, impulse wave. The pullback, 37.5 zone. It's a swing day. That's it. You go. Right? And just target out the pricing as well. Then you should be all honky-dory. It's not a big deal. You can anticipate these and just work with it. The same thing for NASDAQ, Bitcoin. Let's take a look at Bitcoin. These are the 5 assets I'm doing. Hopefully we'll get some software done soon. It's taking a bit of time. The reason it's taking a bit of time is also we've done a bot for the crypto hedge funds as well, so that's why. Now let's take a look at Bitcoin. You see I've got all the days here as well. Right, now with Bitcoin, for example, today is a Monday. We've got Monday or Tuesday. So Monday or Tuesday. Now look, this is a place of a cause, causing of the breakout. So I've got Monday. It's either going to be today or tomorrow. We're either going to push to the upside. Now, if I push to the upside, if I push to the downside, I need to have pricing, don't I? This is where the PST comes in, you see. So, for example, if I want to see where the resistance is for today on the daily, that's 42, and that's a price of 110,302. So I've got 110,302, just about here. Well, just somewhere around here. It's pretty tight, okay? Somewhere there. Okay, and that's right, pretty up close with the weekly pivot as well, which is a price level which you should be looking out for. All right, and also today's, if you take a look at today's trading hours, let's take a look at today's trading hours. What do I have? 11:45. I had 5 o'clock. This is 5 o'clock. We're at a price zone. Then we've got 11:45. 11:45 is right there. Market taking a bit of a, to the downside. All right, but today and tomorrow is a swing day, and the support level is 32 as well. So 106,318, 106,318 is going to be just there. Right, yeah, and also you can see here, for example, on the smaller time frame, how PST is just chucking a UE, turning from the highs, and this would be like a price target for us as well, 48, 108,872, which is what it's done here, pretty much on the daily pivot. Now, because there's a gap here, we can conclude that this will probably push further, and on the daily, oops, let's do this. We are in this zone. Now later, sooner or later, if you're watching the videos, this will break down, okay? Because we should be coming back into at least 99,225 according to my calculations anyway. But if the market does retrace up from here, okay, we'll want to sell down. If it breaks down, any pull up is going to be selling tomorrow, okay? So knowing this in advance is obviously important, and also knowing the pricing is important on the daily, weekly as well. Also, you can see we've pretty much done the weekly targets here, except these lower ones. The lowest price, the lowest PST was 50.97, and what we've got here, let's see what I've got under 50.97. I've got this 107.215, okay, and 106.166. So those price levels here are also going to be important. We'll need to mark them in to see if it's going to be a buy level or not. All right, then you have to match your next hours for today, whatever they are, as I've posted in the members area. But using the days, okay, as you can see, where to buy, where to sell, and matching it to your swing days gives you a lot of confidence. And you can also take a big trade then, rather than mucking around in the middle somewhere. And you can also start on a good foot, right? So if you've got a good price level and then you're matching a swing day with some hours, you've got a highly likely winning trade with a good risk return. So you can really, pump up the account and build a buffer zone before you get into next trading. So for example, I'm back from holidays, right, for 2 months, and it took a few small trades when I was looking at the market. So after the 2 months, what I want to do is I want to wait for a decent spot and then get in gold when I'm trading. Okay, so why? Because I want to start on a good foot and then I want to follow it through. All right. And like I said, it's the same kind of concept for everything. So Mert, if you know your support, resistance, your retracements, you can use them on the daily, match it to your swing day, swing hours, off you go. Hope that helps.